Hey guys, Kyle here from Projection Hub bringing you another video. And if this is your first video that you've come to from Projection Hub, a little bit about us. We specialize in helping people create financial projections for startups, existing businesses, acquisitions, you name it. Those can be for raising investment, getting business loans, which is relevant to why we're here today. But maybe you're wondering, why would someone that offers financial projections be talking about getting an SBA loan today? And I would have two things to say to that. One is financial projections are a very important part of getting an SBA loan specifically. And the second thing is some relevant experience. So myself, I was an SBA loan officer for about 7 years before I joined up with Projection Hub. And so have a lot of experience on that front, helping business owners prepare loan applications, go through that process, review their application, all of the components and documents that go into that, as well as our founder. Adam was an executive director at an SBA lender for over a decade. And so he has a lot of experience reviewing deals and, subsequently helping people prepare projections for those deals. So through our experience here at Projection Hub, we work with a lot of businesses going through the SBA process. And then our team personally has a lot of experience around SBA loans. And so we wanted to try and share some of that information and that knowledge in a comprehensive video. So this video will cover as many steps as I can related to the SBA loan process. It's not going to be a deep dive on every specific component, which we do have many videos and tools that will help with that. And I will share those as we go through this video. So it might be a little bit of a longer video to touch on all the things. If there's a section or a step in the SBA process you're particularly interested in, you can check the description down below for timestamps to jump to those different things. But we're going to cover a lot of different tools and a lot of different tips, and I'm going to link all of that in the description of the video down below. And I hope you enjoy it. If you have any questions, contact us at support@projectionhub.com. Leave a comment on the video. You can do that as well. We would love to try and answer all your questions, so I apologize in advance if I miss any specific detail you were hoping to hear about. Just let us know what that is, and we'd be happy to help you with that. So without further ado, let's go ahead and jump in. All right, so we've got a lot of ground to cover. In order to guide us through the process, I'm going to be using our free SBA loan application checklist document. You can grab this in the description below to use it as your guide. You can already see probably here all of these little links and videos, and all of these tools are linked. Many of them are free. Actually, most of them are free. And so I'm going to make sure we highlight those for you. But go ahead and grab this checklist down in the description below to help you use it as a guide. But this will be home based. This is what's going to guide us kind of through the process. And just like on this checklist, and there's a few things that I'll cover aren't listed on here, but will become relevant as we go through this. And the first thing I want to talk about today is obviously a very important step in the SBA loan process is picking a type of SBA loan. So you may or may not be familiar with what an SBA loan is. So SBA stands for Small Business Administration, which is a federal agency or department of the federal government. And again, I'm not going to get into the really technical nitty-gritty details, but basically, taxpayer money is used to help secure or guarantee some of these loans, right? So the government is providing some funding to different lenders like a bank and some non-bank lenders to help kind of guarantee or back up some of their loans. So it gives them confidence to do some more lending, maybe in a loan that they would have traditionally declined, gives them some incentive to be able to make those loans, right? So that's a very blanket way to do that. That works in a few different ways, but that's not necessarily important to you. You just want to get funding. And so let's look at this a little bit higher level. So we've got 3 buckets of SBA loans that I want to kind of cover quickly. And really what that means is 3 different kinds of lenders is what you're going to be looking for, trying to find the right fit. Now, my SBA lending experience came from a microlender, which is probably the least well-known type of SBA loan or lender, but it's really, really important. And the reason why it's least known is because they're offering the smallest dollar amount loans. But the reality is a lot of businesses, and so I want to highlight on that for you. Now, as I pointed out in this checklist, these are all links. And so, for example, this link is going to take you to a description about what is a microloan, okay? So again, smaller loans of up to $50,000 provided through SBA funding intermediaries. And one important detail I'll mention is I use this word SBA guaranteed. SBA microloans are not technically guaranteed. Those lenders are funded a little bit differently through the SBA government. So honestly, what is probably most important to you to know that is there's less paperwork and the process is shorter. So these loans are typically offered by community lenders, nonprofits, an organization called a CDFI, which is a community development financial institution. And so these are not, a bank is not offering a microloan. Okay, so we'll get to how to find those lenders, but just to touch on what the microloan is, that's going to be a lot of times a startup, a small existing business. They're going to have more flexible credit requirements. They're not going to be as stringent on collateral probably. So there's a lot of upsides to that. Just one drawback is going to be the loan amount is lower, but not everybody needs a bigger loan. So that's a really important thing to mention. 7A is the most common SBA loan by far. So that is what your banks are going to be offering if they participate in the SBA loan program. So a bank can offer a traditional loan or conventional loan or lines of credit or, you name it on the business front. But if they choose to participate in the SBA program, they can facilitate those loans. And again, I won't get into why a bank would or wouldn't participate in that, because at the end of the day, it's really just about complexity on their side. There's some more paperwork they have to do. But most generally, a bank is how you're going to get through with a 7A loan. But other nonprofit CDFIs can offer 7A type loans. Typically, those are called community advantage loans, which operate very similar to a 7A. The only difference is the dollar amount is just less. So a lot of times I think that's like $350,000, $250,000 is if a non-bank lender is offering a 7A product, it's going to be $250,000 to $350,000 max. Whereas like a bank, could technically go up to like $5 million. Now, again, we're not going to go into the specifics of what you can use that loan for and what not. But again, this checklist here does link to details on the SBA website about those programs. So you can learn about typical rates, what those loans can be used for, the specific types of 7A loans. So again, a good resource to do that for. And then lastly, we have a 504 loan, which are typically the biggest SBA loans and typically have the lowest rate, but they have much more specific uses. So a lot of times it's going to be, or I shouldn't say a lot, all of the time, it's going to be used for longer terms, fixed rate financing for existing buildings, huge pieces of equipment. That's really where 504 thrives. And 504s are unique because they're kind of a three-way partnership between the applicant, like a bank lender, and then a third-party lender, and they're all kind of doing their own component in that process that make it possible. Okay, so focus less on the names of these and more specifically on like, what do you need to use the money for? How much do you need? And then what types of lenders are available in your area? And we'll talk about that a little bit. So again, we just talked about what type of SBA loan. If you need more than $50,000 and you need it for a lot of different purposes, 7A is going to be your best bet. If you need less than $50,000, or that's going to be really close to as much as you're going to need, microlenders, I would say, are your best bet. And then if you're talking big building, big pieces of equipment, and that's really what you need the funding for, 504 is a great option. So I think that touches on that. Again, if you have questions specifically about that, you can let us know, but we'll move on to the next section here. And that's going to be touching a little bit on eligibility and requirements for an SBA loan. So that's not all listed here. The best way to learn about this is going to be, again, on the SBA website. And there's two main things I want to touch on here. And that's going to be eligibility requirements and use of loan proceeds. So there are some restrictions on who can receive an SBA loan. Now, most people can, a large portion of them can, but there is some nuances to this. And so let's open this type of ineligible businesses. So here's a semi-long list of descriptions of types of businesses, but I bet you if you read through this, most of these wouldn't surprise you as to why they're ineligible. There's a couple that some people are surprised by, but most generally all of these are pretty understandable. Okay, so the first one that is typically kind of confusing to some people is nonprofits. You can't apply for an SBA loan. There is one type of nonprofit that can apply for an SBA loan, and that's childcare centers. That's a weird detail from that, but generally nonprofits cannot apply for an SBA loan. Again, I won't read all of these, but if you're a lender, a passive owned business, right? That's like passive income on the side, insurance providers, not agencies, but the actual life insurance provider, pyramid schemes, government owned entities. And then you have kind of your quote unquote sin industries. So like gambling or adult related activities, drug related, those typically are not going to be eligible for SBA loans. And again, speculative is another one, like wildcatting. So another one that would go into this would be like house flipping. So typically people aren't surprised by this list. When I was a lender, of course we would run into businesses that were ineligible, but by and large, that was not who was applying for SBA loans. Okay. So let's go back to this list. And the other thing is going to be use of loan proceeds. So there are restrictions to how you can use an SBA loan. Again, I'm not going to go into all of the ways it can be used, but there is a good list on here. So a lot of times working capital, equipment, real estate, I shouldn't just say real estate, but if it's being used for the building you're actually going to operate in, like you can't use an SBA loan for like a rental business. If you're going to buy like an Airbnb and you want to rent that out, typically I don't think that's allowed. You're not going to have like an apartment building that you're going to rent out. That's not what you're using an SBA loan for. Again, so we're not going to go through every single use that you can or cannot use, but I wanted to touch on those quickly. A couple other restrictions are going to be like criminal related stuff, right? So if you are a convicted felon, you're not completely ineligible to get an SBA loan. You just have to do some additional paperwork. If you're out of that process, you have to fill out some more information on that. And there are some types of felonies that bar you from getting an SBA loan. If you're currently, going through like an indictment, then you're not going to be able to apply for an SBA loan. Let's see here. Credit score is obviously going to be a thing too. Credit score requirements are going to be a little bit more flexible for SBA loans, but for an SBA guaranteed loan, so we're talking like these 7A loans, these 504 loans, there is going to be a minimum through most lenders that they're not going to be able to do. And that's typically going to be in the mid 600s, I want to say, maybe low 600s even. But microlenders do have the discretion and the flexibility to go lower than that if they deem it important or necessary in that case. Okay, so we've talked about eligibility requirements. I will link that stuff down in the description below. Different lenders might interpret those rules a little bit differently, but those are things just to make sure you're aware of that. All right, we're not going to talk about finding an SBA lender right this second. We'll come back to that. I want to get to the process. This process, I think, is pretty similar, each lender you go to, just because the process that the lender has to go through with the SBA is relatively standardized in the forms they have to collect. And so the conversation you have with the lender and the loan officers might differ from place to place you go, but the things you have to collect and that kind of stuff are going to be the same. Now, one key asterisk to that is going to be microlenders are very different from one another. They handle it differently just because the SBA isn't actually guaranteeing those loans. There's less like kind of regulation. And so there's less oversight by the SBA on that process. Whereas your 7A and your 504 are going to be very standardized no matter where you go. But just to talk a little bit about the process, each lender is going to require an intake application. They're going to have their own unique application. So when you talk to the lender, it might even just be on their website that you submit it, but you're going to be filling out information about yourself, about the business. That process might even have you just upload documents. It's going to look different from different lenders, but they're going to have their own intake application. So there's not like a general application I would link here because each lender is going to have their own. Typically, after you submit whatever form of initial application, or if you call the lender or whatever that's going to look like, you're going to have an initial conversation with a loan officer. And, they're going to have their list of questions they want to ask you. You're going to have your chance to ask questions, but really it's kind of like your intro interview. Share details about your business plan, your personal finances, all of that kind of stuff, your concerns, questions you have. A lot of people do want to be reserved. They have a tendency to be reserved to talk about these kind of things, but I do encourage you to be forthcoming about details, and I'll hit on that a little bit later as well. But you're going to have a conversation with them, and then they're going to eventually say, okay, here's all the things we need from you. So save yourself a little bit of time, and we'll talk about this in just a little bit. But if you've got all your ducks in a row and the majority of the documents they're going to want, that's a great opportunity to be like, yeah, I've got, A, B, C, D, E, F, G things. I would love to just send them over to you. And your loan officers are going to love you for that because you've got them ready to go. So we're going to talk about that in a little bit. So you'll submit your documentation, and then the lender's going to go through an underwriting process. Okay, so their underwriters are going to take whatever you provide. They're going to do their analysis, their due diligence, it's typically called, and they're going to have several questions, maybe even several rounds of questions that they want to understand how they're interpreting the things that you submitted, any concerns they might have, things that are missing, an additional document, whatever. They might go through that. And again, this underwriting intensity is going to differ depending upon who the lender is and the type of loan you're getting. So for a microloan, speaking from experience, underwriting was pretty scrutinous because there's not this big SBA review process on the back end. And so, that was a little bit more intense, whereas an SBA guaranteed loan, it's still going to be intense, but there's a few different filters the loan has to go through. And so that initial review might be of a different level of intensity. And then typically, I want you to think, when this says lender, I want you to think about that as like an internal review. So people at the bank or within the bank company are doing this underwriting. They're asking you questions. And then a lot of times there is a loan committee review. So your loan officer packages your information. They send it to an underwriter. The underwriter is going to review it, ask some questions. Eventually, if that gets to the point where the underwriter might say, yeah, I feel comfortable with this, based upon information they've provided, the answers to their questions. Typically, that's going to move forward to some sort of committee that actually has to review it and make a decision, yes or no, on that loan. Now, in a microloan case, that's typically the final step. If a loan committee approves it, that loan can move ahead with closing. If it's a guaranteed loan, now different SBA lenders have different levels of authority, it's called. And so if they approve it internally, they might be able to move forward with collecting additional SBA documentation, then just close the loan on their own. Or some lenders defer to completing a package, sending it off to the SBA to get that reviewed. It just takes more time. But that's going to differ between different types of lenders. But typically, let's say the committee approves it, there's going to be additional SBA forms that have to be filled out and signed. Now, these aren't really things you can kind of just prepare for in advance because they're SBA specific forms. And honestly, you just wouldn't want to spend your time filling them out beforehand. And lenders, honestly, if you filled it out for one lender and then you went to a different lender, they may not want to accept it. Even if it's the same form, they might want to have you fill it out again. And so when we talk about the documents here, there's only so much you can prepare for in advance. The SBA additional things, your lender's just going to facilitate that and you're going to go through that process with them. So there might be additional information. And then again, it may require an additional SBA review decision process depending upon the lender's kind of certified authority and the type of lender that they are. And then ultimately you'll close. Now, burning question for a lot of business owners is, okay, so how long does that process take? At the microlender I worked with, we even had an express microloan product that we could try to turn it around in a matter of, a week. That's really fast. That's not going to be common. Microloans, I would assume at least a few weeks is typically on the faster side, but especially for the SBA guaranteed loans. So a 7A loan through a bank or a 504 loan, definitely expect 4 to 6 weeks, 4 to 8 weeks, depending upon the complexity of the deal. And if they run into road bumps and challenges and market conditions, that can all be extended. If you're close to a new round of until they see the newest year's tax return. So there's a lot of different contributing factors to that, but just prepare for a not super fast process. Okay. That should be the first thing you're thinking of. I would imagine a month at the fastest, probably. Now, if it's really dragging on, consider asking, what's going on? I already provided you all these things, but it's taken so long, and you can apply that pressure a little bit, but have some realistic expectations when it comes to that. Okay, so that is your typical SBA loan process. Again, that's going to look different for different types of lenders, but your lender should communicate that process to you. If they haven't, ask them to explain the steps in the process, typical turnaround times, etc. All right, now kind of the meaty portion of this video is we're going to talk about the documents required. Now, again, this video is meant to be kind of a general how to get an SBA loan video. And so, we have additional videos that will focus on specifically how to get an SBA loan for startups and some recommendations there, existing businesses, acquisitions, specific industries. So you can look out for those if you'd like to. You may not have made one for your specific industry yet, so this might be the best option we have for you at this point in time. So I'm going to defer to this list quite a bit instead of going through every single bullet point for every single type of business. So let's kind of go through these because there's going to be a lot of similarities between startups, existing, and acquisitions, and some nuanced differences. Now, for a startup, again, all of these are going to require an application. A lender is going to have kind of their own specific application. They're all going to require a personal financial statement. I have linked to one here. Lenders typically have their own personal financial statements, but this is one where you could probably fill this out in advance and they would accept it, especially if it's the SBA's version of it. But they might have their own form that they like. Regardless, probably a good exercise for you to fill one out on your own, so you kind of know what information they're expecting from you and asking from you. Personal tax returns are going to be a requirement no matter what, usually 2 to 3 years. And I believe this is required for any owner greater than 20%. It's going to have to provide their personal tax returns. In the case of a startup, you're going to have a business plan. As a part of that business plan, you're going to have financial projections. And we'll put a pin in that. We're going to talk about that a little bit more here. You're going to have to complete a credit release form. The lender will typically have one. One thing I can't tell you is when in the process they're going to do a credit pull. The lender I worked for, we would typically wait to do a credit pull until after an initial conversation, until we got to underwriting, so we could save the applicant an unnecessary credit pull. If it's something we realized early on wasn't going to be good for us. I can't comment on whether or not every lender does that, but just keep in mind at some point in the process, you're going to have a hard credit pull. Government issued ID, typically a driver's license, could be a passport, oftentimes a resume, and again, additional SBA forms after lender approval. And the other asterisk here is additional documents down here. These are all going to be specific to the type of loan you have and that lender's preferences. But what we've listed up here are going to be the typical staple documents that take the most time to prepare, so you should have those ready to go. Now, let's take a moment and dig into the business plan and the financial projections for just a second. Specifically for startups, you're gonna have to have both of those. If you're a startup, there's not really any historical information for that lender to make a decision on. And so they're gonna be making it largely off of two things. One, your plan for the business and how compelling it is. And two, you personally. And so whatever you can do to strengthen those two things is gonna improve your likelihood of getting an approval. So some of the things that are linked here. One, business plans available. We have a bunch of free business plan templates. Not for every industry, but a good chunk. I mean, there's 40 or so here. We do have a general one in case your business isn't listed here. I think I have one open as an example. Like here's a barbershop one that's kind of pre-filled out with a fictitious example. Any one of these that we have a free plan for, like this bar, for example, we also have a video walkthrough of how to create a business plan. It's done by yours truly. And I'm actually quite proud of those videos. I think that they've been really well received and very helpful for many people, particularly because, you can create a whole business plan, but these videos feature 5 key points for each industry that I think make it the best it can be to get approved for financing. And so grab the template that is for your industry. Those are free. Watch the video for those. I think that those are very helpful and a good resource. So I encourage you to do that. Now, financial projections, obviously we're a little biased at Projection Hub. These are the most important parts of your application if you're a startup. This is what a lender is making a decision on. Let's assume you're relatively solid personally in your financials. Next is they need to have confidence that the business is ready to go. So financial projections, a shameless plug. We do have over 100, if I can find it, over 100 different industries that we have projection templates for. These are not free, but they are not expensive. These are less than $100. I promise you, it's gonna be very difficult to create financial projections without either paying someone to do it, which is gonna cost more than $100, or having a reliable template. So for example, this is for the barbershop. These blue tabs are all the information that's being edited and input. It's very easy to use. Again, we're just entering these blue tabs here. Your expenses. We have a video guide that shows how to fill out every single template. And then it's going to produce all these charts and graphs in the financial statements automatically that your lender is going to need. And so again, as this video is general, it's not covering specific industry. So you can find the template that's the best fit for you. We'll put a link down in the description below. If you want to try and get a promo code, you can get a promo code to buy a template. That is linked down there below. Okay, so shameless plug over. Documents, continuing on, let's do the existing business. So similar lender application, personal financial statement, personal tax returns, but then we're also going to do 2 to 3 years of business tax returns. you're going to need to have financial statements. So not projections, just projections necessarily, but a year-to-date income statement. Some lenders might want the last year's full year of an income statement or a profit and loss. They're going to want a year-to-date balance sheet. This right here is linked to a free balance sheet template and a video on how to fill it out. Grab that. You can use that. Financial projections for an existing business if the loan is being used for some sort of expansion. Now, if your loan is for, a line of credit or refinancing or, something of that nature, that isn't like you're trying to expand the business in an unproven, undemonstrated way, you don't need financial projections. If you're trying to expand the business, maybe open up a new location or add a new product line, you're going to need to have financial projections. So this link goes to a video that demonstrates a template specifically for existing businesses, established businesses, not startups, on how to create a financial projections for that. So I encourage you to check that out. And some other things, we've got an outstanding business debt schedule, again, credit release form, ID. I've got financial projections in there twice, but it's still good information. And then things like your articles of organization, necessary licenses and permits, that kind of thing. And then again, down here we have additional documents like your lease agreement, vehicle titles if that's a part of the collateral, proof of insurance. Like those are going to be specific to your situation. But again, the list is a little bit different. You're going to have to collect a lot more things for an existing business. But the good news is, approval rates for an existing business are typically higher than a startup because there's more documentation, there's more information on that. And then lastly, acquisition is kind of a blend of the two. So if you're trying to get a loan, an SBA loan for the acquisition, it's kind of going to be treated as both a startup and an existing business because you're going to have access to historical information, but the lender also needs to know, like, how are you forecasting the business is going to do given, new ownership always changes things. Is the team changing? Are you changing the business in a significant way? Are you projecting the business will maintain or grow or shrink? So there's more question marks. And so again, you need to have a little bit more documentation. So very similar things on the top end here. In the event of an acquisition, you're probably going to need a business plan. You're going to need financial projections. And for the sake of acquisitions, because there's typically more money involved, a little bit more complexity, and you want to make sure you get it done right, I have linked in here. We have a service to actually help with creating the business plan and doing your projections for you. And then lastly, depending upon what stage you're in, we have what's called a quality of earnings sniff test, which if you're familiar with what quality of earnings reporting is, it's typically a very expensive process later on, actually after an offer is made, whereas this service is much more affordable and helps you figure out, like, should you even make an offer? What's the right value of the business you're trying to acquire, and some really good information. So those services are linked here if you are interested in checking them out. Certainly no pressure. Okay, so we spent a lot of time talking about the documents, which are very important. If you have any questions about preparing one of those things, about a specific thing for your situation, definitely reach out and let us know. We would be happy to advise you on that. Okay, let's move forward to finding an SBA lender. So there's a lot of different ways we can approach this. Again, we talked about microlenders, 7A lenders, and 504 lenders. Here I've linked several different resources. One, for example, if you're interested in a CDFI, there is a CDFI locator. So what you can do here is, let's say we want a loan fund, and you can find, if you're in Connecticut and you are a micro enterprise, right? So then you can filter that and find some really good options. So what's a little bit tricky about microlenders and CDFIs is they're all very different from each other, whereas banks are kind of standard in their experience and what they're going to offer and their application process and all of that. Whereas the best thing to do for these types of lenders is to do a little bit more research. Like Axion Opportunity Fund lends across many different states, right? So if you want one that's only located, like, for example, I think I have the website up. Bankable is where I spent some time working. They only serve the state of Indiana, right? So it was a much more specific experience versus CDFIs that might cover multiple states. But this is a good resource. Let's go back to our checklist. The SBA has an SBA microloan lender list. Okay, so there's going to be overlap between these two resources, but that is a good one you can check. 504s, we'll skip 7A for a second. Again, these are typically done by certified development companies, which are called CDCs. So these are there are less CDCs than microlenders and 7A lenders because it's a very specific type of loan. Here you can find those based upon your geographic location. And then for 7A, two resources here. One I've got says if you want to find the lenders, and one is if you want the lenders to find you. If you want the lenders to find you, SBA has a lender match tool where you can submit some information. It goes out to a bunch of different lenders, and then they can opt into if they want to talk to you further. That is definitely an approach. The lender that I used to work at, we would receive these. And to be honest, it's not that we were intentionally declining these, but they were just not always the best loans because it's kind of a scattershot approach and it's not very customized to you. But it certainly doesn't hurt, especially if you're struggling to find a good lender for you. And then this tool is one that we've made, and this basically is a database of a bunch of different lenders. You can play around with different filters like who's making the most loans to startup trucking businesses in New Mexico, and you can see who's doing the most of those loans, and so you have a good idea of who to contact. And so you can get access to this tool to try and find a good lender for you. I would recommend there. So 7As, there's so many different 7A lenders. There's not really like one specific list of them. Those are good resources to check out on that. And if you have questions and you really need help trying to find a lender, reach out to us. We've got a video on how to find an SBA lender. Just reach out to us. We'd be happy to give you some pointers and maybe even provide a few recommendations to you. All right, getting down towards the end of the video here. I know there's a lot of information, a lot of tools. Again, everything is linked down below. Please don't hesitate to reach out if you have questions. We'd be happy to point you in the direction of something else if we need to, but just trying to cover as much as I can here without making this video 3 hours long. And two last things I want to talk about. One is this SBA application expectations. So this is to just make sure you're aware of this and you kind of expect this going in. Personal guarantees is a big thing. So again, if you own more than 20% of the loan, you are going to have to personally guarantee a loan. And if it's an SBA guaranteed loan, like the 7A loans or the 504 loans, that kind of carries even a different weight to it. And so you should be expecting that. A lot of times people say they want to keep the business and personal separate. That's really good advice for bank accounts and bookkeeping. That's not realistic advice when it comes to getting a business loan, especially an SBA loan. And so be prepared. You are going to be required to personally guarantee a loan, especially if you are the sole owner or own more than 20%. Collateral. Okay, so different SBA loans and different lenders might have different tolerances for this and different requirements for this, but in general, every lender wants as much collateral as they can get. And so you should be expected to provide that. At a minimum, all business assets will be declared as collateral. If there's a significant shortfall in business collateral, you should be prepared to be asked if you have personal collateral to pledge. So if that's a second mortgage on your home, free and clear vehicles, you name it. That shouldn't offend you or shouldn't surprise you. The lender's just trying to mitigate their risk. An SBA loan does reduce their risk. It mitigates their risk, but it doesn't eliminate it. And the SBA wants the lender to get as much collateral as possible because the federal government doesn't want to throw that money away either. There will be an owner cash investment, 10 to 20% of your loan request. So if you need $100,000 to get your business off the ground, you got to be prepared. You're going to have to put in $10,000 to $20,000 of cash. Whether that cash was given to you or lent from somewhere else, or it's from your savings or whatever, but the loan is not going to be for 100% of the cost to start the business if it's a startup, even not a startup. So be prepared for that. And then lastly is your deal will need to show sufficient cash flow, especially for a 7A loan. And if it's a bank lending that, they are going to have like a minimum debt service coverage ratio. I'm not going to try to explain it to you at this moment, but you can kind of look that up. Projection templates will help you calculate that. But they just need to this helps ensure that you're going to be able to pay back the loan. The business is going to be able to afford to pay back the loan is what that's doing. So those are just some expectations I want you to have going into the process. And then lastly, wanting to leave you with just some recommendations to improve your approval chances. These are not guarantees, but from my experience as a lender and from working with businesses through Projection Hub that have seemed to really help and always help the loans that I was helping, or that I was working with, and what I saw worked for them. So number one, be prepared. Have as much documentation ready to go as possible. Again, I mentioned you can't possibly have every single form completed your lender's gonna need from you, but you can have a lot of it ready to go. Use a tool like this to, if you've got your personal financial statement, your tax returns, your business plan, your projections, those things all in one place, that's really, really helpful for a lender, and you're gonna be able to move quicker through the process. 2, find the right lender for you. If you're working with a loan broker, keep in mind, they're getting paid by the lender to help source deals. So they may not always have the best interest in mind in picking the right lender for you, okay? So this also might mean that your hometown banker may not be the best lender for you, okay? Look into what types of lenders are doing loans to your type of business, your stage of business, okay? So do your homework to find the best lender for you. Not everybody that has money is going to be the right one to lend to you. And if you've already been told no, that doesn't mean everybody else is going to say no. 3, share the dirty details up front because they're going to come out eventually. Criminal history. Why is your credit score really low? They're confusing financial line items on your financial statements. Don't try to hide anything. Be forthcoming with those details. It will save you a lot of time and energy and frustration and, potentially embarrassment. So just get that out ahead of time. 4th, have accurate financials and realistic financial projections. Do your research, compare to industry benchmarks, talk with experts to review your things. Just have that buttoned up. If you show a lender bad projections or bad financials, it's kind of hard to undo that impression. You don't want to say, oh, sorry, let me go fix that for you real quick. And they're like, well, what are they changing? Have that buttoned up. 5, if you're a startup, ditch the really long and generic business plan. Short and sweet, jam-packed with useful information. Demonstrate your real market opportunity in the research that you've done to prove that there's a market, and the traction your business has and the things that you're doing. Prepare that. All of our business plan videos that I showed you go into greater detail on that for each specific industry. Next, I forgot what number we're on. Strengthen your application personally. Ways you can do this is add a co-signer. That's an uncomfortable conversation a lot of times, but that means a lot to lenders. Another way of saying that is outside income. So if you have a full-time job, consider keeping that full-time job if you can for a little bit of time. And personal collateral, be prepared to know what you can pledge for a loan to strengthen your application. Make sure you as an owner and your leadership team have relevant and ample experience. You want to make sure your lender feels confident that you know what you're getting yourself into and you know what you're doing. Whether you or your startup team as a unit, you just want to leave no doubt that you know what you're doing and you know what you're getting yourself into. Yeah, that's it for those. So grab this checklist down in the description below. We didn't have time to go into every single link and video on here, but I promise it will be helpful for you. Reach out to us at support@projectionhub.com if you have questions. Leave a comment if you have a question. And give us a thumbs up if you appreciated this video. I know it was a long one, but there's a lot of things to cover and to consider when it comes to an SBA loan process. And I hope that this video was a little bit helpful in getting you prepared for that. So I wish you the best of luck with your SBA loan endeavor. And again, reach out to us if you have any question and need some help. Thanks.